We got Scott Bauer joining us, the CEO of Prosper Trading Academy. And next to him is another Scott, Mr. Scott Connor.
Great to be
back here in the studio joining us. Director of Education and host of Virtual Trade, Stephanie Lewicki, Senior Manager of Futures and Forex at TD. Mr. Bauer. Yes. So the market is rallying, and as we were just talking about with Nir Kassir, that it's happening against an earnings backdrop. It's actually worsening looking forward. Is that a problem?
Well, it's not a problem for the here and now. It may be a problem 2 months from now, or 6 weeks from now, when the beginning of the next earnings cycle starts. But I think one thing that investors have to really take into consideration is that the overall market rally is not happening just because of earnings. There are so many other dynamics, none of which is more important probably than what the Fed
seems like earnings is like at the last of the
right.
list.
What the Fed has done or not done over the last 3 to 4 weeks that is really propelling this marketplace. I mean, that is, to me, that's the backdrop of why we're up, whatever the number is, 15%, or whatever that number is.
It is
off the
NASDAQ 15,
here, right? That to me. But going forward, is this projection for slower growth, is that going to be concerning? Yeah, but I think the market's going to put that off until probably March or early April.
We're basically busy correcting December's sell-off that arguably we're seeing probably was overextended based on the corporate situation, because I joke about earnings kind of being the last of the list right now, Scott Connor, but they're definitely helping because they're showing that companies are still making a ton of money, and people are going, oh wait, why did I sell Apple down 35% or whatever? Why did I sell this down for the moment?
Right, exactly. And I think you got to keep in mind that we're coming off 5 quarters in a row of better than expected earnings, right? And what happens is when you go forward like this, going into the first quarter of 2019, the comparables start to get more difficult, right? When you have that great string of great quarters together, it gets harder and harder to beat those quarters. So I think that's partly what we're seeing. Because if you look at what people were predicting for 2019, first quarter of 2019, back in September, we were still looking for a 6% beat. Now it's a 1% underperform.
Yeah.
So again, sentiment has really changed. I think also what's very important about fourth quarter earnings, which we're in the midst of now, and it looks like we're going to beat by about 12%, something like that.
Yeah, like 14.
Is that there's always a huge guidance component in the final quarter of earnings, which is 2019. So I think when you put that all together, plus the external factors you just spoke about, they've kind of put the brakes on the first quarter.
I would also say that a lot of companies are withholding guidance as well. So as more come online, maybe that guidance will improve for next quarter. I don't know. But Stephanie, the other thing is there's a high bar because Q1 2018 was like first quarter as the tax cut was being implemented. So our comps for next year are going to be extraordinarily hard.
Yeah, I think, Scott had said that the sentiment has changed. I don't think it has changed yet because that's not reflected in the market. Again, NASDAQ is up 11, 12, 13%, whatever it is, year to date. Russell's up 13% year to date. Boeing is up 22% just this month. And this is the stock that you would think wouldn't be this strong because we have no deal yet on U.S.-China trade. So I'm really surprised at the Boeing move. But yes, we are coming off 5 great quarters in a row. We're still getting earnings coming in at 12%. Yes, so we are hearing more companies guiding lower for Q1, but I don't see it reflected in the market yet. Will that start to change when those Q1 earnings come out? But I don't see any fear in the market right now. We got a VIX down to 15. I don't think things are great, though. We still have, this morning again, we had poor data come out of the Eurozone. We keep hearing every morning it seems like, Eurozone,
a mess.
China, it's a mess. Yeah, it's all negative data across the board, except here in the U.S. we still have some solid economic data that we're getting. So, how this, and I agree with what you just said, how earnings kind of are on the back burner now. Normally we always focus on earnings to say, well, it's the companies that have to drive this market, but there's really so many other factors, and really Jay Powell changed the whole dynamic of this market.
You've now got 17% of companies with an RSI over 70 and overbought, Scott. It's actually even more than we were at the high in September just because of the speed at which we've come back. So broadening this out to the market as a whole, is there enough outside of the earnings guidance, right? Because if we take the earnings guidance, we say, all right, right now that's not necessarily a positive thing for stocks. That doesn't mean stocks can't go up, of course, because you've got multiples. Are the things that are driving the multiples, what we're discussing, the Fed, enough basically to keep momentum the way it's been, where now you've got momentum that looks by some breadth indicators, I mean, almost like highs.
Yeah. I'll be honest with you. Anybody that says that they know the question, the answer to that question, that
Right.
says they have the crystal ball, don't believe them. Because at any one moment here, we can get some of this external news, some of the geopolitical news, none of which, in that case, is more important than what Stephanie said, the China tariff talks, that can change the entire landscape. Sure. Now, my thought on that is, if we get some sort of positivity, some sort of positive announcement, I actually think we sell off on that, because I think so much of what we've seen in this rally not only is based on the Fed, which is front and center, that news is out there right now, but also that something good is going to happen with the tariff talks. So, can we keep this up? I'm cautious. I don't even want to say cautiously optimistic. I'm skeptical.
All right.
That way.
Well, you're not
Outright
alone.
skeptical. Mr. Connor, last thought before we go to
I
break.
was just going to say, when you look at, the mood going forward, you just saw Goldman Sachs come out and say 2019 could be a very difficult year. We saw the IMX from TD Ameritrade. That was not a great number. We're at 5-year lows on that. So there's a lot of negative sort of publicity out there right now for the marketplace. But again, I think what people are focusing on is going to be like target margins. What are companies going to actually do? And if we do get a little break from China, that's where the concern is coming from, because it's supply chain disruptions and higher costs that are putting pressure on the margins. Now, if that does kind of find a solution, that could be a big boost for the second half of 2019.
Yeah, all right. Guys, good stuff. We're going to take a short break, come back and talk some M&A. A little bit more of a fun story, because all the rumors are circling again about what Apple can and should and would and maybe will do with its massive pile of cash.